The following is an update and technical analysis on Numinus Wellness Incorporated, a company of the psychedelic sector, here off the daily interval, where I will showcase the video demonstrating the execution of this short trade setup towards the end of the video, located in the left-hand corner of the screen here. Diving right into it, we have this nice, clean, bearish falling wedge pattern, nice clean divergent high with the negative and or bearish divergences really constructed amongst all three key technical momentum indicators, with the oscillator histogram beginning to churn to the downside below their zero line thresholds with solid red candle print data prints below that key inflection point, whereas we have this reactionary high downtrend line off the May 2022 reactionary lows, and that had a significant development amongst the underlying trend of the downside in the longer term intervals, outmatching any nearer term intervals there. And we had a nice clean breakdown sell signal, counter trend rally. Watch for this key 1624 price resistance correlated with the 50-day moving average. And really what's so significant from that counterpart is off the 16.6, we were trading spot price 16.6, and the entire trade was good for a 17.5% crash. And really what was so significant, especially for an active and or day trader or a long-term dollar cost average investor, nice clean day trading opportunity there. And that was good for a 10.5% bounce on a single day there. And really what is so significant from this breakdown is the 50-day moving average puncturing the 200-day moving average in a complete ultimate backfill of the gap and bid heavily with velocity to the upside there. And bull traders, long traders want to sustain, keep this rally, this counter trend rally sustained to the upside, ultimately challenging that 1624 price resistance. Call it a multi-year technical price resistance zone with just a multitude of reactionary highs and lows to strengthen the validation of that key inflection point. And that is a big level to watch, correlated with the 200-day moving average resistance up above. Just a ton of resistance up above in that key inflection point. And you would want short sellers and or bear traders to defend that key inflection point heavily on a complete overshoot of the gap, the backfill of the gap down to that 1300 price support there for another 17% crash if and when we get there, offering a clean, objective short trade entry for a prolonged move to the downside, where long traders and long-term investors want to pop that level. They want to take that level out and then ultimately re-challenge the multi-year primary reactionary high downtrend line there for a move right back above, ultimately breaking out and challenging some key resistance levels up above. And then ultimately averting the death cross bearish continuation pattern among the moving averages. And that is a key inflection point, whereas you'll have some of these key inflection, whether it's a golden cross or a death cross, a continuous puncturing of the moving averages ultimately define a key inflection point where it will mark the bottom, correlated with the death cross or the golden cross marking the top. Critical junctures of the moving averages and a prolonged move to the upside. So again, you'll have a nice clean, that nice clean risk reward ratio if you're long here, right back up to that primary downtrend line if you're bullish for 29% in gains. If we retap that primary downtrend line, if we don't retap that primary downtrend line, it's going to be even more bearish, losing the momentum of its energy when the chops are a lot lower. The reactionary highs are a lot lower in a sustained move, whereas you'll have a healthy bounce right back to that primary downtrend line, and then ultimately a re-challenging to break right back above that primary downtrend line. I'll keep you updated if I see any more significance here in the charts. The key technical momentum indicators are already on critical zero line thresholds here, whereas you'd want to see a prolonged move to the upside and avert any technical key momentum damage will be disrupted if a solid breakdown below that key inflection point on a solid daily red candle close, undercutting those previous lows there, would incite further more damage amongst the key technical momentum indicators, and then ultimately re-challenging that 1300 price support, where bull traders and or long traders need to defend that key inflection point heavily at all costs, and long-term dollar cost averaging support levels. So we'll see what happens. I'll keep you updated if I see any more significance here in the charts. You can even make a case for 11.7 price support here at the 11-cent range for another move to the upside. But again, a lot of these penny stocks are very volatile in the sense where they could be completely taken out of the exchange.